entitled The Connections World, the Future of Asian Capitalism. I've got a, all right. I'm sorry, Ivana. I've got an echo coming back. Joining us online is Danny Quah. We all know him as well, Dean of the Lee Kuan Yew School of Public Policy and Professor of Economics at the National University of Singapore. Danny, hi. Thanks for joining us online.
Hello, good to see you.
And here in the room with us is Marco Chirullo, Deputy Head of Unit Far East DG Trade at the European Commission. Marco, thank you for walking down. Elena Suárez, Senior Advisor, Business Europe. Thank you for biking here. And online also joining us is Joseph Ernest Zveglich, Deputy Chief Economist, Economic Research and Development Impact at the Asian Development Bank. So thank you very much also, Joseph, for being here. So the rules of the game are very simple. Simon is going to give us some of the key findings of his report on the connections world. And then we'll turn to our panelists here. I have a few questions for them, get them to give some feedback, but also Europe's interest in the economic partnerships with the Indo-Pacific, with the Asia region. And then I will open the floor to questions and comments from yourself and online as well. People can send us their questions. My one plea, as always, is please keep the questions and comments short so we can have a real interactive discussion. It's very difficult for me to read long comments online, especially. So without further ado, I'm going to turn the floor to Simon. Simon, some of the key findings of the connections world.
Well, thank you very much, Shada. And let me start by saying that Saul and I are delighted to be here, and we're very thankful to Ivano and you for putting together this occasion, and to all the other panelists and friends who are here as well. So I'm going to start off by talking about Saul and my book, The Connections World, which came out about a year ago. And it's not going to be about where Asia is right now. It's not going to be a discussion of Asia's current growth prospect, shall we say. I mean, obviously, there's a lot of discussion at the moment as to where China is heading and the type of consequences of the policies that have been applied in the last few years for China, let alone the geopolitics. That's not what I'm going to talk about. I'm going to talk about the big arguments of the book, which are really about some of the structural features of Asia. And we argue that Asia is obviously the great success in development and in economic terms the last 50 years. And in achieving that success, it's had recourse to policies that are, shall we say, unusual, at least by the standards of Western Europe or even North America. And they have been a fertile use of industrial policy, of which South Korea is a very good example, as well as a broader linkage between government and business. This is what we refer to in the connections world, which has brought about a degree of coordination between these two parts of the economy to the greater good of Asia. And it's allowed for the creation of infrastructure, a whole range of really very powerful and growth-propelling, development-propelling initiatives. And in the book, we argue that this has brought enormous benefits, but it comes with some consequences and some costs. And I'm going to talk a little bit about them, not because I want to be negative, but because I think we are actually at a conjuncture where some of those consequences may be coming home to roost. So let me just pick up what I think are the 3 or 4 major fallibilities, costs that are associated with the connections world. And by the way, what I mean by the connections world is a very tight association between, on the one hand, politicians and political parties, and on the other, businesses. But something very specific in Asia, which is very rarely found outside, which is not just standalone businesses, but it's business groups. And these are diversified, complex forms, normally owned by families, often dynastically, and generally with very, very opaque governance. Examples can include extraordinary dynamic groups. Tata, for instance, is an example, long-standing example. And so in modern-day India is the Adani Group, which has been in the press for a long time. But it's true right throughout Asia, and it doesn't really matter what the political currency of a particular regime is. It cuts across it. Now, what the consequences that we pick up on are that I think are worth really thinking about and are potentially a bit troubling is that obviously this tight association can give rise to corruption. It can give rise to all sorts of other moral hazards. But I think the more important feature that it gives rise to is the vesting of enormous economic power in the hands of these business groups. In other words, it gives rise to concentration. And although market power is very hard to measure with accuracy in Asia due to lack of good statistics, if we just use a simple measure of concentration, and by that I mean the relationship between the ratio between the revenues of the largest firms and GDP, let me just put on the table right now to give you a sense of how important this and how striking it is, that in Korea, in Thailand, and in Vietnam, and to a slightly lower degree in the Philippines, the 10 largest businesses, almost all of which are family-owned or other business groups, their revenues account for over 40% of GDP. These are numbers that you really would be very hard put to find in most advanced economies, let alone in other parts of the world. Now, a third consequence of this structure and these relationships is that many of the business groups or the companies within them are very dynamic and actually quite innovative. And when you are lucky enough to have a job in them, you're well paid and productive. But they're not very good at creating lots of jobs. And so one of the great challenges that the early political leadership of Asia, from Nehru onwards and the like, which they were concerned with, was to try and reduce informality. That simply hasn't happened. So you have very concentrated business groups occupying large tracts of the economy, but generating very few jobs. And most jobs that are generated are still, and this is true in China, Vietnam, as it is in Asia and Bangladesh, in India and in Bangladesh. The large majority of jobs are in the informal economy, where they're extremely unproductive. Now, those are some of the reasons why we should be thinking about it. And allied to that, of course, is that this model, if you like, has been highly successful in an era where growth has been led by what economists call extensive growth. In other words, the applications of greater capital and labor, rather than being driven by significant productivity increments. But certainly in China and in much of Southeast Asia, the ability to grow extensively is being reined in. It simply isn't quite the option it was. And because of that, Asia, like many other parts of the global economy, is having to look to innovation to drive itself forward. And when we look at innovation in Asia, we find that, yes, some of these business groups are more innovative than others, but on aggregate, most Asian economies do not really score very well in terms of innovation. There are a couple of important exceptions. One is South Korea, where innovation is largely concentrated in really a handful of companies which comprise major parts of the economy. Just to put this in context, Samsung alone accounts for approaching a quarter of GDP, its revenues. And most of the innovation in South Korea is done in Samsung, Hyundai, and other big LG and other big companies. The other exception, but of a more complex and nuanced nature, is China. And China, there's no doubt that in certain areas is highly inventive, innovative, but the extent to which is clouded by poor statistics and misleading statistics. things, for instance, like patents should not really be relied on as an indicator of innovation in that context. There's a lot of noise around that. And in India, there are pockets of innovation, but relatively small pockets, but without, I think, the supportive infrastructure in terms of human capital, infrastructure and the like, to drive it to greater propagation and diffusion through the economy. So that's our view. To cut to the quick, Asia's success has been built on these close relations between big business, business groups, and politicians. It's taken it a hell of a long way. That model is now, I think, at risk of not being exhausted, but certainly in need of reform and reappraisal. And the last part of the book, and then I'll be very brief, turns to something that we may want to come back to, is what to do about it. Because when market power gets entrenched, and it is entrenched from both sides, from the politics side and from the economics, business side, obviously the incentives to change are very few and far between. So it's very unlikely to emerge organically. Now, what do you do? Well, back in the 1930s, at the start of the New Deal, Roosevelt in the States essentially broke up business groups, sort of by a series of measures. MacArthur did the same, following from the same playbook in Japan after the Second World War. I don't believe for a moment that this is really a meaningful option in Asia right now. There's not the political taste for it, and I think it probably would be highly disruptive in that way. So what we argue for is, in a sense, a different approach, which is to break down the power of incumbencies. And how do you do that? Well, you do it, I just mentioned the headline approach, taxation, in fact, discriminatory taxation and inheritance taxes, can come back to that. Measures to reduce the incentives for organizing as business groups and for allowing these pyramid-like structures in which they specialize to be kept in place with all the opacity and all the bad governance that comes with that. That's more problematical. The Koreans tried it for many years, but other countries, for example, Israel, have been more successful in some of those prohibitions. And finally, and then I'll stop, change the focus or broaden the focus of competition policy. Most competition policy in Asia is weak. The agencies are often not very robust in their organization or in their political muscle support. But in addition to which, they tend to follow the conventional playbook, which is to look at market power at the level of a sector or activity. There's nothing wrong with that. But when you have such high levels of aggregation, of concentration in the economy as a whole, we argue that this also makes a case for considering not just how things stand in particular sectors and activities, but how it stands within the economy. And therefore, it should be addressed as such. So I hope that's given a flavor of what our argument's about. Thank you very much for listening.
Thank you very much, Simon. So making a very powerful point about the model in Asia, parts of Asia no longer being fit for purpose, focusing a lot on innovation and the future of that research and development innovation in the Indo-Pacific. So Danny, if I may come back to you first to get some feedback on what the arguments that Simon has made, and then to focus a little bit, if you don't mind, on what to do about it, and whether, first of all, whether, Danny, you agree with what Simon is saying, the basic tenet of his arguments. Thank you.
Well, thank you. Thank you very much. And thank you, Simon, for such a powerful exposition. Let me lay my cards on the table. What Simon and Saul say make a lot of economic sense. A priori. They are careful to say that this isn't something that necessarily applies to Asia today. They're careful to say that their points are not meant to help us draw inference on how Asia has navigated the last 5 decades. This is a priori look going forwards. And based on that a priori look going forwards, I, for one, would like to be clearer about the mechanism by which they feel their arguments can see greatest traction. For me, the concentration numbers by themselves are a little bit like the pattern statistics that you deride, Simon. They are not totally meaningful to me. There are different reasons why industry, wealth, personal concentrations of resources might be as concentrated as we see them to be. It might indeed be that they come from a nefarious manipulation of behind the scenes, inefficient economic methods, but they could also be the result of an emergent optimal solution to yet deeper challenges that we don't see on the surface. So I suppose at the end of it, even though I agree with the thrust of the argument, I find that I am unconvinced. I feel that the argument hinges on an a priori view that there's a golden ideal out there of how markets should operate. They operate according to the way textbooks tell us they should. My sense is that no one believes those models anymore. And if we're going to use those models as a way to criticize what we see in Asia today, we're going to need a little bit more evidence, more than just concentration statistics, more than just saying, these rich families control 40% of the economy. For all I know, they could be like big tech companies being efficient that way. I'm happy to get into further unpacking of this disagreement, but I wanted, if I may, just pick up on the last part of your question. I don't know if you want to come back to that, but you had also posed a question about what we think, what each of the panelists, interlocutors here might have as an opinion of what Asian economies need. So if I can just put my candidates on the table, and then we can come back to that if you like. I think three things that Asian economies need going forwards, and that the EU and others around the world might be helpful on. First is scale, wide expanse, so that productivity can rise through Asian economies operating economies of scale and learning by doing. A lot of Asia remains poor. So there might be 650 million people in Southeast Asia alone, but if many of them are below middle class levels of consumption, they don't form a strong consumer base from which manufacturing, production in Asia can rise through applying economies of scale. And that matters because it is through economies of scale and manufacturing that countries raise productivity through learning by doing. So the first thing that Asia needs is scale, and that will help in productivity. Productivity, the way that Asia is now and that Asia is going to be for the next several decades, is not going to come from fancy R&D. It's not going to come from technical progress being pushed at the boundary. It will come some from human capital development. It will come some from management methods. But the big bang for the buck is from learning by doing, basically selling a lot of stuff and getting better at it. And the criticisms that we make today of how breaking up industrial structures in Asia might well hobble that process. So we're dealing with fire here, and I'd like to see, more embedded evidence on Saul and Simon's proposals. The second thing that Asia desperately needs is a well-functioning rewards system so that ordinary people can see improvement in their lives from hard work, can see space for their families and offsprings, and others like themselves to continue to improve their well-being. To be very clear, this again does not mean destruction of of the wealth at the top of the distribution. It means creating space for those at the bottom. These are two very different things. And this is how we've seen growth occur through incentives in China and in Singapore, from the very big to the very small in Asia. Let me conclude the intervention that I've been given here by giving my third point on what Asian economies need. And that is not letting the perfect get in the way of the good. The way in which Asia cobbles together solutions might include concentrated industrial structures. But if we object to those because we feel that there's a perfect system out there that is an ideal, and we feel that by destroying what we've got today gets us closer to the ideal, I think we could be doing a lot of disservice to Asia. Do not let the perfect get in the way of the good. Back to you, please. Thank you very much for allowing me this time.
Thank you very much, Danny, making three also very important points: the need for economies of scale, well-functioning reward systems, and not let the perfect get in the way of the good. So let's move. Thank you very much indeed, Danny. We'll come back to you with some follow-up questions. Let's move beyond the premises of this publication of this book and look at the wider picture of what the EU and the Indo-Pacific Asian countries can do together, I insist on the word together, to get us into this new era of innovation, digital, greening of the economy. I know, Marco, that we have an array of tools and instruments, initiatives that have been there for some years, but also a number of new ones that keep coming up. And I was just wondering if you could identify for us some of the areas we're working together to get into this new era that we are embarking on together. Which would you identify as being important priority initiatives?
Thank you, and good morning, good afternoon, everyone. Yes, indeed, the EU has been developing over the years. It's now a few years that we've been engaging with quite an assertive agenda, trade agenda, in particular with Asia, and to the FTA tools, which are quite diverse and, of course, address different needs also. Different realities on the ground. We have FTAs with Korea and Japan that are fundamentally different in the objectives than those that we have with Vietnam. We are in the process of negotiating with Indonesia, or might resume with Thailand, might start with Philippines. So there's, let's say, I would say the traditional tools, which have evolved over time to take on the challenges that we're facing now. For instance, it's known that the trade agreement recently negotiated with Chile had a strong raw material pillar that 10 years ago we would have not thought about. So on top of these traditional tools, which are evolving with the needs, there's a focus on what actually Asia has been important for, and that was has just been evoked when it comes to innovation. And the Indo-Pacific strategy, which the EU side adopted in 21, expands on that, because beyond the ambitious trade agenda, it expands on the need to focus on digital economy, green technologies, green services, for instance, when it comes to ASEAN countries, that came out of the EU-ASEAN summit. And resilient supply chains. And let me point to some of these tools, the digital partnerships, for instance, which were launched established with Japan in 22, Korea 22, and Singapore this year. And they have already delivered on digital trade principles to reflect our joint commitment to an open digital economy. And then we're now looking at having proper legally binding agreements in the digital sphere, for instance, with Japan, with Korea. And to give you an idea of the digital trade principles, it focuses on issues such as semiconductors, by setting up early warning mechanism for supply chains, for their supply chains, on research, on development, on submarine cables, because connectivity comes through the proper infrastructure. We're negotiating a data flows provisions in the context of the EU-Japan Economic Partnership Agreement that would come on top of the already mutual adequacy arrangements that we have in the area. So these are examples that, of course, in this case, focus on developed, innovative, well-established economies with whom we have a long-established relation. But then if you look at all the tools that complement this agenda, they also go in the sense of reinforcing cooperation in the digital sphere, in the trade and sustainable development area, all the green economy. We have increasingly stronger chapter in the FTA on trade and sustainable development, but we also have partnerships like the Just Energy Transition Partnerships, which have been negotiated, agreed with Vietnam and Indonesia. And then we have a number of projects in the area of green economy, which are underpinned by financial support, being it technical assistance, being through a global gateway as a financing tool, which is in the process of developing, and which are all projects with help in the renewable energy sector, the transition from coal-dependent economies, developing clean energy technologies. Last comment before, and then of course we can expand on these. I as former negotiator of the EU-Japan agreement, I followed, for example, also the establishment of the Green Alliance with Japan and all the work that we're doing in areas such as offshore wind power, because the EU has, EU business has the technological edge there and can help in the transition towards renewable energies. And there's work ongoing with Japan, with Korea, with Taiwan, and more, and a huge potential to go beyond that. And a lot of effort has gone into that, not only from a trade perspective, but of course with all the different services of the Commission and with the cooperation with our Asian partners. I'll stop there.
Thank you, Marco. Just very quickly, because I know it's of great interest to many of our participants here, is actually the entire debate, which is by no means resolved, about decoupling versus de-risking, and to what extent you think this is going to be relevant going forward, because it's created quite a degree of consternation in many parts of Asia, fearing that we're creating parallel universes, economic planets in a sense. So if you could just quickly elaborate on that, where the thinking is at the moment.
Well, it is clear when we talk about economic security, immediately the accent goes towards the risks, vulnerabilities, and the need to get to create an environment that allows our business, our societies to shield themselves from those risks, so to address them properly. Fine, but a big pillar of the economic security is really making sure that economic integration continues wherever it is possible. And to be frank, it's possible in a very large chunk of our trade relations, including with those countries that pose certain concerns, like China. A great deal of our trade with China is I would say risk-free, and that has to continue. But one of the pillars of the economic security strategy is continuing to build partnership with the broadest possible range of countries. And when it comes in particular to Asia, where we're not the only ones who are concerned about certain dependencies, there's a demand in the region for closer partnership, for a diversification and the construction of supply chains that are resilient, which means they are not concentrated. And there are certain countries in the region that are particularly concerned, and they've been looking at us as a partner to address those issues related to vulnerability. So I think we shouldn't forget that a fundamental pillar, in order to have the economic security dimension related to be careful about our weaknesses, that works insofar it is the complement of the precondition, which is a rules-based system, open economies, strengthening our partnerships with all the countries which can respond to our needs, raw materials, disruption of supply chains, but the countries which also have their own needs, and we can have a response for them. And this is ultimately this is about partnership, and that's what we're talking about.
Indeed. Thank you. Thank you very much, Marco. In fact, online questions are already coming in, so I would encourage all of you online to send me some more. I'll go to them in a minute. I'm going to turn now to you, Elena. You've been listening to what has been said in terms of Asia's future, the innovation gaps that exist, and of course, the economic security strategy of the EU. Business Europe or business in Europe has always had a slightly ambivalent view of Asia, looking at it as a great opportunity, but also quite concerned about continuing obstacles, protectionism, etc. So when you look, I know and the comment has been made that Asia is not one entire homogeneous whole, but when you look at the big markets in Asia where your focus is, what are you seeing today? Opportunities or challenges?
Thank you very much, Shada, and thank you very much for having me in this panel with distinguished speakers. So, of course, the opportunities, we see huge opportunities in the region. And just to mention the latest forecast by the IMF, that the region will grow at an average of 5.3% in 2023. This was forecasted in July. There might be adjustments after seeing what's happening in China. But all in all, the region would contribute around 70% of global growth. This is the fastest growing region in the world. And we, of course, need to tap on this, on the potential that the region offers. And that is why we are happy that the Commission, and we know that DigiTrade has very well understood this, and that is why we have a number of active FTAs, the one that has been signed already, the one that are being in the process of being negotiated, like with the ASEAN countries, etc. I will not go into the details because they were mentioned by Marco. Of course, what we prefer is agreements that are legally binding, of course, and the example of India, of course, we would prefer to have an FTA. The DTC, of course, is with India is welcome, but the FTA is the one that would really give us the legal certainty and predictability that business needs. So, all in all, for us, pursuing trade and investment agreements in the region, this is fundamental. And here I would like to make the point that for European businesses, there cannot be strategic autonomy. And I'm sure that a lot in the room are familiar with this. There cannot be strategic autonomy without openness. We should continue to pursue our positive trade agenda. And of course, in the region, as I said, given the huge potential, we should continue. I would like, to make also the point that FTAs are important for companies to increase resilience, to diversify our exports, of course, but also our imports, the inputs that we need also in the EU to produce, to improve security and mitigate geopolitical risks, and to promote more sustainable standards and ensuring a level playing field. I would like to put the example of Vietnam, a comprehensive agreement that was signed in August 2020, and we see that, of course, through this framework, Vietnam is perceived as a much more business-friendly country, and the FTA has been a success. We see an increase of our exports of 20% from 2021 to 2022, and an increase also of Vietnam's exports to the EU by 34%. These are the opportunities that we see in the region. Let me mention a couple of risks that we see, perhaps. One is that we are detecting a little bit that the EU is somehow a little bit losing its appeal in the region. And this comes, for example, with certain environmental initiatives that we are putting forward, and this is the deforestation regulation, or CBAM, and the way that these legislations are being implemented in the region. Certain countries, Malaysia, Indonesia, are struggling to implement these legislations, and of course we are receiving a bit of a backlash there. Another risk, of course, is what we heard from Simon, and this is about everything that he explained about concentration, etc. Because of course these groups in those countries have an interest on not opening up that much the market to foreign competition, and this of course hinders innovation. Of course. So maybe I leave it there.
Much, Elena, we'll come back to some of the FTAs that are being negotiated. The one with India, especially, I think is important to see how realistic we are in actually thinking we'll get a deal done as quickly as the Commission wants. I also want, you mentioned there is a backlash on certain Green Deal components. CBAM, there's a question here there from the online. I would say there's more than a backlash. It's actually creating quite a little of strain and tension within these countries, Malaysia, Indonesia being some of them, of course, that needs to be talked about as well. Let me turn to you, Joseph. Thank you very much for listening patiently to what has been said here. The Asian Development Bank, of course, we all look to it for its forecast about where Asia is headed in terms of growth and development. So the latest from ADB and some of your comments, please, Joseph. Thank you.
Okay, thank you, Shada. Thank you for inviting me today. It's been a pleasure to join this panel. I had the benefit of having Simon and Saul presenting their book a few months back, and really fascinating work. Let me start a bit, I guess, by talking a bit about the growth forecast that we just recently launched as a way of looking at where we are today. We do see that growth in the region is been somewhat resilient, although that the risks have been heightened, and in part because the rebound in the People's Republic of China is really a big driver of overall growth in the region. And so whereas in April we were thinking there was quite a possibility for an upside surprise, we're now starting to think that maybe with the risks to the outlook in terms of PRC property sector possibly hindering growth there might be in fact a bit stronger than we're seeing. But still we're expecting to have growth in developing Asia of about 4.3% this year and rising, or 4.7% this year and rising a little bit to 4.8% next year. So as Elena had pointed out, this is still one of the fastest growing regions in the world and contributing a large to global growth. The inflation is also coming down, which unfortunately is another area where some of the immediate risks in terms of the weather could create problems that would lead to policy responses that could hinder growth. But we do feel that overall that the region is in a good place for the near-term growth. But this workshop's really more about some of the longer term issues. Simon and Saul's book does a really excellent job of looking at quite a lot of Asia's history and thinking about how it has managed its success in terms of the connections and the structures that are in place. But we have several major trends that are going to affect the environment going forward. Asia in particular is aging quite rapidly. So the demographic factors that had once fueled developing Asia's economic success are really poised to become challenges in the forthcoming decades. We're already seeing that in economies like Japan and Korea. But of course, China is at that point where it's struggling with aging, and even some of the economies that are still relatively young are at the point where their demographic dividend is dying down. And I want to raise this point because we had talked about the productivity as one of the key issues. This coming up also in Danny's comments. And there is that the challenges posed by aging is not so much on the labor shortage or those issues. It's not so much the inputs, but the effect that it might have on the total factor productivity. And so if innovation is going to be the way forward, having an aging demographic does kind of undermine or make that difficult. So those policies that would need to promote innovation in the future would need to take into account the fact that it's going to be a very different demographic mix as we move ahead. Second really big issue is, of course, climate change. So when China was having its massive catch-up spurt, it was probably the last time in this era where economies can, to a certain extent, ignore the environment while they grow. We're now seeing with the policies coming from the developed countries of this a need to reflect climate issues in trade arrangements that creates a different environment for economies that have not yet caught up. So Danny was talking about the economies of scale, and the larger economies could also tap into a domestic market to a certain extent to get economies of scale. But that's not going to be necessarily true for some of the smaller economies unless they start to look at, regional, sub-regional arrangements such as the ASEAN group of countries. But even then, that connection with other countries is going to be important. So this, how they address climate is going to be particularly important. But I think more than the question of what it might have on the growth model is the fact that globally, the success of reaching net zero targets, it just succeeds or fails in Asia. So developing Asia's share of global greenhouse gas emissions had doubled between 1990 to 2019. So it's almost half. It's about 44% with the latest data. And meanwhile, the region stands to lose almost a quarter of its GDP by 2100, with higher losses in countries like India and Southeast Asia in terms of the impact that climate change could have on these economies. And importantly, a globally coordinated approach is what's going to help us to achieve that net zero at the lowest cost. But we're also starting to see that economies are looking at green investments and protecting their green sectors, which works against us in mutually achieving those goals. It's going to mean that we're going to be more inefficient in how we reach those goals. Each individual country is going to have to take up a greater burden and greater cost. And what we should be seeing is a way for us to trade that burden by, say, reaching net zero by transferring funds to countries that have greater scope for reducing carbon, like the poor countries in Asia, but of giving them those funds so that it compensates for the steps that they could take. So globally, we would be better off. And finally, it's in talking about connections as ADB, I'd be remiss if I didn't mention the importance of regional cooperation and integration, and looking at more broadly at these connections with Europe. And I think Marco and Elena have more to say on the connections with EU. But I'd just like to point out that the trade and FDI have been cornerstones of Asia's success, but geopolitics now is making it difficult for other countries to take advantage of that. There is some scope for within region trade, but we also don't want to see that we become a bunch of isolated trading blocks, because it will be a less efficient outcome. So, Europe's green investment drive does align with Asia's renewable energy sector, but then attempts to say protect the electric vehicle sector in a home country is going to be completely going against those broader goals that we all have. And finally, the issue was raised about supply chains and the changes that we're seeing. Global events like the pandemic that disrupted supply chains has started to shift emphasis from efficiency, thinking about the efficiency of supply chains, to the resilience of supply chains. And here, I do think there are strategies that can heighten efficiency without necessarily having to rely too much on the political impetus of reshoring or friendshoring, such as just diversification across countries of supply chains, such as we had seen in the region. Unfortunately, some of that diversification comes at the as a response to, say, the China and U.S. trade war, where we saw Southeast Asia benefiting quite a bit from that diversification. But it is something that could be beneficial for ensuring that supply chains remain efficient, but also could be more resilient in the future. Digitalization as well as picking this part of trade. Oh,
yes. No,
okay.
thank you very much. I'll go back to the panel, but first I need to open the floor here as well. Thank you very much. And thank you for bringing in the geopolitical elements and the geopolitical challenges hanging over the trade and economic partnership that we talk about. You've mentioned electric vehicles and the whole concept of friendshoring and the need to, and you mentioned demography. Very important also for an aging continent like ours in Europe. So that's a commonality that we have with many parts of Asia as well. So let me now open the floor to questions and comments from the audience here, live audience here, but I've also got some very important and interesting questions coming in online. So without further ado, let me give the floor to Finmar. Finmar, everybody please just introduce yourselves very briefly, and then I'll turn to the panel.
Thank you, Shada. Finbar Birmingham with the South China Morning Post newspaper. I've got a couple of questions to Marco on de-risking. It's a controversial one, and the member states in Europe seem to be very divided. How does the Commission convince such a big tent of countries that has both Lithuania and Hungary in there that this is the right course of action, and what does that look like? Are you optimistic that it can be done before the elections? To Elena, it also seems to be a divisive topic for business. You have French car makers asking for an EV probe and German car makers lashing out against it. So is this new terrain of economic security? I mean, how divided is Europe's business community on that? And just quickly to perhaps to the three other panelists, how does Asia view the European de-risking debate? Is it something that they view as a sort of necessary evil, something they're concerned about? Good to get the Asian perspective on that too. Thanks.
Thank you, Finmar. I'm going to go to the panel in a second, but I'll take a few more questions from here. In the meantime, if I may just read out what I've got online. Anyone else coming in here at the moment? No. Okay. So I have a question here for you, Simon, which is about, in Europe, there is a great variety of models of public-private connection and also sharp differences in industrial policy between member states. And Asia is presented here as one uniform model by you, Simon, he says. This is Joost van Eersel. And aren't there any differences of approach among Asian countries, and how would you describe those? Danny, there's a question for you about your reference to learning by doing and scaling. And Alison Hunter says, this requires a mass effort of citizen worker engagement and innovation experimentation. And how do you create the political buy-in for a new governance model to achieve this? And a question also from Jussi Makinen. And this is about the EU needing materials and components, but also data for initiatives like CBAM, digital product passports, sustainability reporting, etc. and how do these complex cooperation models, how can they be achieved? This is Jussi Mäkinen. So first, I'll go to you, Marco, to answer Finnmar's question, Elena, you, then Danny, Joseph, and then you, Simon. Please.
Well, the question, of course, is a very legitimate one, but it applies very often across the board. It's always a fine balance to make sure that member states agree on the way forward. It's the Brussels game in a way, and I think in the area of autonomous tools, for instance, that have been approved over the last few years, we could see how the debate and discussions among member states evolved beyond expectations. So these are not easy discussions, but they are based. There's a process for that, and in the past we have demonstrated, especially when it comes to issues such as investment screening, for instance, that eventually there was a convergence. So of course I'm not I cannot give you certainty as to the way forward and how and when member states will whether the member states will agree on all the elements, but the process is in motion. There are issues which are important also to determine the way forward, such as the definition of the methodology to assess, to determine the risks for our economies and societies, which will inevitably also shape, because it will give us data elements for the policy making. So step by step, I think the discussion will continue and will eventually lead to the synthesis that is expected from member states. It's a difficult discussion, but we had equally difficult discussions in the past, and then eventually a way forward is found.
Marco, it's a very personal question for you, but how do you keep track? How should we keep track of all the different elements, initiatives, ideas that are coming up? I mean, there seems to be, the DG Trade seems to be very much in a very innovative mood itself, with all kinds of new ideas coming forward, going to member states. The European Parliament then has a say in it as well. So I can imagine if you're a diplomat or you're following this as a reporter from the outside, trying to keep track of what the EU is doing, it's pretty difficult these days, isn't it?
Yeah, I think a little bit linked to what I was saying, it's a fast moving, evolving scenario. I mean, I'm one of those trade negotiators who grew up thinking that the WTO would sort it all out, and I'm still a firm believer that that would be the best of the ideal word. But it is true that there are challenges coming up, becoming clearer and clearer in terms of risks and that need to be addressed, and that requires a reformulation of policies, adjustments, and also being creative. And I think that is and when I say being creative with the ultimate objective of preserving what we have, which is to the extent possible an open trade environment, which, as I was saying at the beginning, it needs to be preserved as much as possible. So yes, it is a moment of reflection, of new initiatives, new tools being developed to address the concerns that have become apparent for a number of reasons over the last few years. Some were evoked, the pandemics, the current of course war is in Ukraine is another example with the invasion by Russia. The difficulties which are linked to the lack of level playing fields, and there we have to be good at distinguishing. Level playing field is one thing, and we have tools that are being developed, but we also have existing tools to be used. WTO, and there are measures that can be used in that context, and then the more national security type of issues that have another dimension. But we in trade we keep very clear the concept that there are different concerns and different strands of actions that need to be used.
Okay, quite a tapestry then. Thank you very much, Marco. Elena, please.
Yeah, thanks, Finbar, for your question. I'm not going to comment, of course, on divisions among the EU business community. What I can say is that for businesses, it's really critical that we define well what are dependencies and what are risks, so that we create the predictability and legal certainty that companies need to shape their supply chains. And obviously, businesses are critical in this process of defining what are risks and what are dependencies, because they know best, of course, their value chains, and they have also knowledge on the ground. And in this regard, we are, of course, looking forward to the list of critical technologies that the Commission will be coming up soon in October. Another point I would like to make is that, of course, companies are already working already for years in their strategy to de-risk and diversify. And here we see, for example, in China, where companies are decoupling headquarters, from China supply chains from the rest of the world. And this, of course, comes at a cost. And I think that one of the three elements mentioned by Danny was the importance of economies of scale. And of course, with this decoupling, we are losing efficiency, and we are losing also economies of scale. This comes at a cost, as I said, at a moment when European companies are already assuming the higher costs of the green transition and decarbonization. And now we also need to assume the costs of security, etc. The question is whether the consumer will pay or not.
Thank you, Elena, for that cautionary note. Danny, if we could turn to you, and then Joseph for some of your feedback on what you've heard about the Europe-Asia dimension to this conversation.
Thank you very much. Did I hear correctly, by the way, that Finbar says he's from SCMP, South China Morning Post?
Indeed, he is.
Because if there's one publication that has its finger on the pulse of how Asia thinks, it is exactly SCMP. So I wouldn't dare to tell Finbar, what Asia thinks about things. But I do have some reactions to the points that to the questions he raises. Particular, how does Asia view the de-risking debate? Let me speak to that from my own perspective in Southeast Asia rather than necessarily all of Asia. If by de-risking, we mean lower risk, we mean patterns of trade and engagement that are more robust, have greater resilience, then of course it's got to be a good thing. But de-risking in that sense comes from diversification. It comes from trading with more trading partners, not fewer. It comes from recognizing that trade with China carries certain risk associated with it, but those risks then need to be negatively correlated away by trading with yet other parts of the world. It doesn't mean disengaging from decoupling from China. De-risking, again, means trading with more partners, not fewer. That's how I and many people around me in Southeast Asia would view the de-risking debate. However, if that term is being used as a euphemism broadly to mean containing China, then my view is that the rest of Asia sees very little logic to the de-risking imperative. Southeast Asians well recognize that China, when you do a survey of Southeast Asians, more than 60% say the least trusted nation in this region, China. But then when you ask them which nation is the most admired nation, they also name China for what China has been able to achieve economically. Asia has a nuance, Southeast Asia has a nuanced view on de-risking if it's being used as a euphemism in that regard. But overall, it sees little logic to a de-risking narrative that comes close to decoupling or disengaging. If I may, at this point, it seems helpful to remember why Southeast Asia looks at China in this way. Joseph, I think, made the very important point on how hard it is to leverage economies of scale in Asia, a platform that I was trying to build on, especially in Asia that's fragmented, low income. Indeed so. That is why so much of Southeast Asia, so much of the rest of Asia feels that globalization in whatever appropriately modified form emerges from today's geopolitical conflict is going to still be so important. Some adjustment to globalization will be needed for environmental impact, for distributional concerns. But if the nub of geopolitical conflict is a disengagement, a full-throated retreat from globalization, that is going to make life extremely difficult for a lot of people. We need to do some kind of adjustment on the globalization to take forwards coming out of this geopolitical conflict, but it cannot be zero globalization. Let me leave it at that. If I may, at some later point, I'm going to come back to Alison Hunter's question about learning by doing. I have a response to that, but let me turn back to the rest of the panel for now.
Thank you very much, Danny. So Joseph, would you like to respond as well to where you see prospects for working together with Europe on some of these issues that we've pointed to, the challenges?
Well, I think really want to emphasize Danny's point again. Agree with it fully that if de-risking means thinking about trade, widening trade, diversifying your trade partners, then that is something that could be supported on economic means. But if it's being used as a way of hiding essentially a political agenda, then it's just going to lead to greater greater inefficiencies, greater isolation, to the detriment of all. So where we would see some areas, I think, for positive collaboration is that the EU has certainly been on the forefront in terms of say, areas like green finance, where you have the ideas of the taxonomies and the elements in place in order to verify that what is a green investment truly is a green investment. I think there's a lot of learning there, and through trade agreements that creates the incentives for compliance that I think could be mutually beneficial. So these types of areas where standard setting can be built into trade arrangements to help to essentially raise the standards throughout, I think can be mutually beneficial, even if they're seen as, at least in the front, as something that would be a hindrance to trade. It would have long-term benefits and help to foster stronger relationships. And I'll turn it back to you, please.
Thank you very much, Joseph. So let me come back to you, Simon, on some of the issues that have been raised. And also, you haven't really talked a lot about the EU sort of role in any of this. Is there a model there is in Europe that could be significant for Asia? And also some of your thoughts on what has been said so far. Thank you.
I think I'll say a few things and then I'll pass the baton to Saul, who has a number of things I think wants to say too. Well, firstly, I thought I learned a lot. It was many interesting points. On a specific question that was sent in online, many models in Europe, and yet we seem to focus on just one in Asia. Well, we don't really. I mean, what we basically say that what is so striking is that there are quite a lot of different paths which seem to lead to very similar endpoints and destinations. And that's the point that we're picking up on, so that there's considerable idiosyncrasy in how policy is designed and implemented at the country or even at the region or state level. But actually, it seems to come to some very similar outcomes in terms of the configuration of the economies and the configuration of business. Let me go back to some of the big issues, and that Danny raised, and he's absolutely right to say that just concentrating on concentration ratios can be misleading, and certainly gives a partial picture. And obviously, when we think about competition, we want to think competition. Concentration ratios are one measure. We obviously want to think about profits and prices. And this is something that Saul and I are working on with Indian data now, but it's very hard to do. But insofar as we are getting there, the conclusions seem to run in the direction that market power is not trivial in Asia and probably needs to be addressed. Now, Danny makes the good point. Surely you've got to be careful when addressing it that you just don't destroy value, that there are reasons for why this is the case, and there are reasons that should be taken seriously. And I absolutely agree with that. In the book, we basically ask, why are business groups and family business groups in particular in situ? Well, they're normally to do with missing markets, imperfections and the like, whether it be for the market for management or skills, whether it be for the market for capital. And yet we clearly know that over the last 40, 50 years, those imperfections and missing markets have become less of an issue in Asia. And yet these business groups have actually become more entrenched and more powerful still. So I think really the efficiency issue is not quite the way I would approach it. I think it's more complex than that. Now, we don't argue in the book for breaking these companies up. I think it would be disruptive. What we do argue is to put considerable policy pressure on business groups to form themselves as standalone companies. And that does not necessarily need to be value destroying, not a bit of it. In fact, it might be value enhancing precisely because of the improvements in corporate governance and in transparency and the like. And I think, amongst other things, and it's a link to the EU, that going down that route would actually accord much more with the priorities of Europe, whether it be through FDAs and the like. But the issue that both Elena and Marco mentioned of protectionist issues and lack of transparency. And I think that would be very helpful in going that way. Finally, on this matter of destroying value or potentially imposing unnecessary costs, one thing that we pick up in the book is not really about distribution in a big way, but what is very, very striking right through South, Southeast, and East Asia is the enormous concentrations of wealth that have occurred over the last 40, 50 years. Now, much of this is driven by these extraordinary increases in growth and in revenues. But the wealth that is in the hands of these business group owners has, really expanded at an enormous rate. And really now, wealth inequality is at very, very high, and in fact, even at growing levels. The duality in the labor market that I also described drives inequality in wages and in earnings. And that has also been heading upwards. So if I were looking in the longer term and bringing in some of the geopolitics, and not geopolitics, but politics per se, it seems to me the bigger risk to Asia is that actually these systems will implode or perhaps explode simply because of their inability to pull up a sufficiency of poorer consumers, of poorer people, the things that both Danny and Joe mentioned, in an adequate way. And my final point, before handing it to Saul, I think Joe really rightly, demographics, absolutely key, but climate change is absolutely enormous. We don't touch on it in the book, but really the pressure on most of these economies is growing and is potentially, as you point out, highly destructive. Increases in average temperatures, in declining water tables, and in all sorts of environmental and other measures in a place like India are incredibly alarming. And then if you look at the drive towards green energy, particularly the shift towards renewables and the like, which is gathering pace, then really it runs into two big issues. It's unlikely to be able to gather sufficient pace in order to put aside the also extraordinarily rapid increases in coal and fossil fuel production. And it also runs into major constraints from the supply of electricity and the grid. So these are very, very big issues as a whole. Saul, do you want to quickly come in as well?
Yes, Saul, would you like to? Yes, thank you, Katrina.
Well, I won't repeat what Simon said. It really has been a fascinating session, and I've learned a lot. I think what's come out here for me, first of all, is the key role of Asia in the global economy and how the EU, Europe, cannot ignore this region and has to think very hard about its strategies. And what I think we've tried to do in our book, and actually other discussion, is set the context for the setting of those strategies. Issues, for example, of decoupling and aging and climate change are really central. And that's what's come out to me. I'd really like to make 3 points. The first is to repeat what the message of the connections world is and try it and draw out for it the implications for EU policy and trade policy and so forth. I think we see the connections world as having two elements totally interlinked. The first is an extremely close relationship between the political elite and the business elite of a form that for the most part doesn't hold in developed economies. And this is a mutually supportive, not necessarily a corrupt or nepotistic relationship, but it is it's just a very close, mutually supportive relationship. Now, in principle, the reason why this hasn't been awful for Asia in the way that those sorts of relationships have historically been awful in economic development is because Asia has relied on export-led growth. And so the competition element has come in through trade and through foreign direct investment. And so the obvious implications of that type of model, which is essentially protectionism and stress on domestic firms over overseas firms, has been highly limited, although there is though there are now, paralleling, of course, what's happening in America and what's happening in Europe, there are increasing pressures in Asia to move away from that type of model or to delineate that model to smaller blocks. So that's the first point. The second point, this is just picking up on Danny, and I think I don't want to add too much to what Simon said on Danny. I would only make one point. The issue of business groups is ultimately a problem that firms operate in multiple sectors simultaneously, have market powers in lots of sectors, not in a single sector, and they are opaque. So they can transfer resources in all sorts of funny ways from profit-making to loss-making firms if they so desire, and if that is of political or other relevance for them. Now, what this means is that they are able to resist the fundamental Schumpeterian creative destruction process. High productivity firms do not necessarily drive out low productivity firms, and that is the main process that we understand that drives the rise in productivity and the rise in growth. Now, that has not until now been a problem because essentially everyone's growing. You know, on a rising tide, all the ships float, but we see a danger there. So I just want to, that's my response to Danny's very powerful critique. Two more very quick points. One, I've been a little surprised. There's been a lot of emphasis on trade, and I don't think the word foreign direct investment has been mentioned. But if you really think of EU relationships with Asia, and Asian relationships with the EU, is primarily through foreign direct investment. And I'll just sort of, that's my question actually to the panel. I would like to hear more about policy frameworks for all of that. If you were a business, that's what you would be talking about, I think. My last comment it's about this de-risking and this debate and so on and so forth. And I think we do need to have a better grip on the changing geopolitics of the region and and the way that policy needs to work with the grain of the wood or with market incentives for businesses. I mean, for example, another thing that obviously you can't discuss everything, but I was expecting a discussion of the BRICS meeting of the last few months ago and how the BRICS is being, you know, recreated. Danny and I used to teach about the BRICS together in LSE a long time ago, is being refashioned as a sort of, well, I don't know what you think it is, Danny, but as a sort of China fan club, really. And that's really rather interesting. And it does, so geopolitical situation is changing. That's the first thing. The second thing I would say, and this is just obvious, but it's worth saying, this de-risking idea, policies are very hard to implement if they're not in the interests of businesses. So policymakers may think it's a terribly good idea to persuade firms to de-risk, but firms may or may not take that view. It sort of depends on their attitude to risk and their cost of capital. And my feeling, I've done some work on sanctions against Russia recently, which of course you might call a boundary condition of de-risking is sanctions. They're surprisingly ineffective. They're just, you know, businesses for the most part are not doing nearly as much as you might have expected would be done. And my suspicion is that policies towards de-risking will also run into similar issues.
Thank you very much, Saul. So we have questions coming in now, but you've also expanded the discussion. Ivano and I are very aware of the fact that we will be talking about the Global South, the BRICS, etc., in days to come, weeks to come. That question obviously is very much on our table, and we're both writing about these questions. The FDI issue, I will turn back very quickly to Marco and Elena, but I'd like to take a couple of questions here. So I have the lady here in the blue jacket, please. And Danny, I haven't forgotten you with your learning curve. Yes, please.
Thank you. I'm Shili Zhu from European Link Media. I'm very happy and very honored to participate in this event. I have two questions for all of you. My first question is, how do you evaluate the role of the new working group for financial regulations, which is just set up during the EU and the China high-level trade dialogue held in Beijing? My second question is, what's your view on the cooperation and the competition between China and the EU in terms of trade relationship, especially against the backdrop of some latest developments? Thank you.
Thank you. This is from the Embassy of Islamic Republic of Iran, and two short questions to whom it may regard, but I would prefer our colleagues from the European Commission to respond. And this is the two or three questions are regarded to geopolitical competition and rivalry. The first question is that there are some writings in European websites or newspapers saying that in this rivalry between China and the United States, the European Union can raise the third voice. When China has its own multilateralism, then the America has its own multilateralism in Southeast Asia. The European Union must follow to raise the third question, because there are some member states in ASEAN and the other countries would like to free themselves from this competition. 10 years ago,
I'm sorry, we're really running short. So if you could come to your second question.
The second question is that what's the final situation in ASEAN? You know, what is the final, is there any one voice in ASEAN countries, or is there any disagreement, you know, among the member states? This is the second question. Thank you.
you very much. I'm sorry to have interrupted you, but we're running a bit short. And I'd really like to hear from Danny on your second question and also the third pillar or third voice in geopolitics of the EU. So let me turn now very quickly to Marco, Elena, and then go to Danny, Joseph, and then come back to you, Simon. But we're short of time, so please be succinct in your responses.
Yes. First of all, thanks for all the comments I've heard. Very quick comment to start with on this, the risking as opposed, I would say, to decoupling. I think the response, the message that the President von der Leyen has sent in this respect has been clear from the very beginning, and she has said it openly in the European Parliament back in March, I think it was already, about the fact that it's there's an element which is the fundamental. Is creating partnerships and diversifying, and when it comes to decoupling, that it doesn't mean creating interrupting the flow of trade and investment. It's just assessing the risks and maintaining open the trade investment for the rest. And I think this is in a way, and I go to the question related to China. That's how we've been addressing managing our relation with China so far. There are clearly issues on which there are concerns and disagreement that need to be addressed. And the EVP, Executive Vice President Dombrovskis, was in China this week. Actually, was actually back yesterday. And as it was evoked for the annual high-level trade and economic dialogue with the Vice Premier Healy Fang. And all these issues of disagreements have been addressed, but also the issues where cooperation and joint action should continue. In the context, when it comes to trade and investment, of rebalancing of a relation, which is because there is a clear rebalance. Let me remind you, there were 400 billion trade deficit last year. And we consider that it's partly due to a certain extent or large extent due to the barriers to access to the Chinese market, opaque, untransparent regulation, and so on and so forth. That is it's a big chapter that deserves an event on its own, so I will not expand. But so that was part of the discussion, and then there are areas on which we have been discussing fruitfully with our Chinese counterpart, and one was evoked before. Green financing and taxonomy. This is an issue on which over the last few years, our colleagues in DG FISMA and the Chinese counterparts have been exchanging and cooperating, and the working group that has been mentioned will provide the platform to further expand the technical level, the discussions, and hopefully ensure further progress in this area. On China, I think how to evaluate in a way already answered. We need to manage the differences, and we need to manage the great deal of trade and investment interests which are common, which do not need de-risking, but need to be managed hopefully based on transparent rules and a removal of the existing barriers. Investment. It is true. Investment, if we mention a number of countries in the region, the EU is a very important investor. I mean, the classic case is Taiwan, where we're the main investor in the country. But that applies, of course, to China and applies to other, increasingly more and more as a result of the FTAs. For instance, Vietnam is one example. Sorry. Yeah, and so yes, it is true, and there is also good cooperation on investment facilitations in the WTO with the recent work in that context with the country. So there is a good engagement in the region when it comes to investment. If the question relates to investment, foreign direct investment, screening mechanism, we have one in place which is now inward, of course, which is now under review, and there will be results coming in the coming weeks, which as our assessment is that it has worked very rather efficiently, and it has not led to fundamental changes in investment trends. It has focused on specifically sensitive sectors, but overall, it has not changed the trend of inward investment from, in terms of the overall policy of the EU. EU has always been welcoming investment and continues to do so, and it's to a large extent also an economy that has based its relations with trade and investment abroad. When it comes to the outbound investment screening, that we'll see what will come out in terms of proposal. It's very hard for me to give any possible let's say opinion on that while it's in the making. The trend out there, other partners is there. We'll see what how Europe will go about it, but it's too early for me to expand on this.
Understood. Thank you. Thank you very much, Marco. Elena, please.
Yeah, thanks. Now, on the question of investment, well, I think that we mentioned trade agreements, but we normally mean trade and investment agreements. So many times these are separated, but investment agreements for us are also essential to protect European investments in those countries, of course. So we mentioned trade, but we mean the two. And then on the question on China, cooperation and competition, etc. Of course, we compete with China, no doubt. We have our issues. We need to look into the vulnerabilities that we have that become risks. But of course, we need to also continue to talk to China, no doubt. And climate and environment has been very much mentioned as a challenge that we need to tackle. And you cannot solve the challenge of climate change without China. So of course, this is one area where we need to continue to talk to the Chinese. We're very happy that actually the dialogues with China resuming face to face, because I think that it was quite damaging that during the pandemic we were not talking to each other face to face. So I think that this is very positive, and we hope that this will continue and that we don't sort of burn all the bridges that we have with the Chinese, because we also don't know what will happen with some of our other key partners, a big one, the other side of the Atlantic. So of course we have our issues with China, no doubt, that we need to look into carefully, but of course we need to continue the dialogue with them.
I think that sums up very nicely the EU-China relationship at the moment. Absolutely. Danny, you can see that we're all starved for information and knowledge from ASEAN on how you see geopolitics and this US-China rivalry and the rest of the world being sort of presented with a very simple but destructive binary choice. So your views on that are sought after.
Thank you very much. You're very kind. Let me pick up on exactly this point and relate it to the question from our colleague from Iran. ASEAN has the view that, the great powers are in this intense rivalry. But outside of the great powers is actually 80% of humanity. 4/5 of the world does not live in either the United States nor China. And so for all the rest of us to have our economic prosperity, our economic journey ahead of us twisted and distorted because of this increasing zero-sum competition between the two, for whatever reason, is not a journey that we want to be on. So I and others are thinking about this as there needs to be a group of third nations. I know that our colleague from Iran said third voice, but third nations, combining not just the EU's third voice, but everybody else. Because everybody else, including ASEAN in this discussion, we have our own agency with our own legitimate interests and our own well-being at stake. These interests should not be subverted to the zero-sum competition that's now emerging from great power rivalry. The problem is navigating great power rivalry, navigating geopolitical conflict, is an activity that shows massive increasing returns to scale. The bigger you are, the better you are at this. And everyone outside the great powers, especially small states, need to band together on those domains that we share common interests. all the rest of us will never come to 100% agreement on every single point, but there are many things we agree on, and those things we need to be working on together. So I'm happy to go into greater detail, but roughly speaking, that's the ASEAN position. That's my own personal position as well. We need to have a grouping of third nations, whether we want to call it a Bandung 2.0 or a Frankfurt 1.0, something that brings us together to make our interests, to define our interests better. So this leads into a question that Saul asked, and let me end with that. BRICS, when they come together, are they the third nation voice? Are BRICS a China fan club? The quick answer is no. Every one of these BRICS nations looks out for their own self-interest and only that. But they do see the collective sense of safety in numbers from the risks that are now being brought out in a world where an American-driven narrative on friendshoring, grouping together with like-minded allies, a narrative that ties together values and trade, those are risks for all the rest of us. And so BRICS is a manifestation of how each of them looks across at the others and says, you are not really my enemy. No, sorry, you are not really my friend, but you are the enemy of someone that's rapidly turning into my enemy. And for safety, I need to hang out with you. Not from a great admiration necessarily of what you're doing, but because we need to show safety in numbers. Let me end on that. If there is time, I know we're rapidly running out of time. Poor Alison, her question about learning by doing has kept being pushed off because these other things kept coming up. Let me, if I may, put that on the shelf again if we have time. Thank you very much.
And if I may, please do deal with it very quickly now. So,
okay.
It's yours again.
If I may, then Alison, I've been thinking about your question about the mobilization that we need to get people behind learning by doing an economies of scale. And I think it's related to the second point I made, the second thing that Asia needs, which is a well-functioning reward system. What we need is to align ordinary people behind these large-scale advantages for nations learning by doing economies of scale. And the Singapore experience over the 1970s and 1980s showed that. What Singapore did was it brought in foreign capital, the investment point that Saul made, and it used the manufacturing that we got through learning by doing to bring on board the ordinary working people. Upwards income mobility of the working class is a hugely important driver for learning by doing economies of scale. And I recommend that all other nations that need to do this look to their working class, look to their ordinary working people. Thank you very much.
Thank you very much, Danny. Joseph, 3 minutes for you, please. I'd like to finish at 11:45.
All right. I just wanted to use actually the question on this final situation in ASEAN as sort of a jumping off to move back from the political to the economic, because I think the ASEAN experience is very useful in terms of thinking about how do a group of small countries start to get scale. So ASEAN operates by consensus, and so it's sometimes it does slow to act. But it also is very pragmatic, so has taken actions, where consensus could be reached, like, bringing tariffs down, but also keeps on the agenda persistently difficult issues like trade in services, for example, and keeps bringing that forward and finding ways that they can move this forward. And some of this gets reflected in things like common sets of standards for green finance as a way of making sure that across the ASEAN region, we have some similarities in the way this will be working as a way of achieving an ultimate goal. So that's all I wanted to add to that.
Thank you very much indeed, Joseph. So Simon, your 2 or 3 minutes to wrap up.
Well, first, I'd really like to thank again everyone who's come today, and Saul and I are really appreciative of being able and our ideas, and the discussion has been both interesting and taken various nice turns too. I want to pick up on two things, actually. Well, one thing, which is a comment that Danny just made about the upward mobility of the working class, as it were. And I actually think it is a key point. I entirely agree with him. And the big question is how to achieve that, how to bring sort of better jobs, more security in jobs, and obviously what wrapped up in the better jobs wrapper, as it were, is more productivity. But I believe that is the crucial challenge facing Asia. We didn't talk enough about it today, but really employment and the nature of employment is the big thing. It tends to get swept aside by growth numbers, GDP, in other words, national income. But really, employment growth has been there for sure. It's been impressive in many cases, particularly in China. But as I did mention earlier, a lot of the jobs that have been created are insecure, low productivity and the like. So there's an awful lot more work to be done. And I think if that isn't really set about quite soon, it will be very, very disruptive indeed. And that obviously is linked to issues of skills and human capital. In fact, in our evaluation of India's capacity for innovation, the thing that we really find that holds it back is the absence of a supportive skills and human capital framework. And the final point, which is sort of be in my bonnet particularly, I think both Saul and I think, is that as countries go richer, and heavens above, these countries have grown a lot richer, and some are, like South Korea, are richer than many European economies now. You need better mechanisms for dealing with risk. And although some countries have unemployment insurance, other sort of social benefits and the like, a lot of these are not very well designed or are absent. And a place like China in particular, I think, will really need to think very carefully about how not just to bring up the working class, as Danny puts it, but also provide adequate frameworks for softening or mitigating the risk that comes with being a richer economy and be a globally integrated economy. Thank you for.
Thank you very much to everyone. We're 15 minutes beyond the time we had set for this conversation. But as you said, Simon, it's been really, really multifaceted. We've looked at so many things that went beyond what you had published, you and Saul. But I think that was a very good point to start from, and looking at the long-term challenges facing Asia. But in my work for the last 35 years or so on Europe-Asia relations, what I find increasingly is the commonality of our challenges. Yes, we look at each other and talk about us and them, but in the end, when you look at issues like demography, inequality, the better jobs challenge that you've talked about, Simon, climate change, digital, I see so many areas where we actually share the same concerns and where our priorities are very, very similar. So when Ivano and I look at our Asia program, we're not really just looking at Asia, we're looking at our relationship with Asia and Asia's relationship with us, so finding the common ground. And Danny and Joseph, thank you very much for bringing the voice from Southeast Asia, because one of the things that we also are challenged by is the great power dominant narrative. And I think you're absolutely right, Danny, to say that as the European Union, we ourselves are middle and small powers that can learn from each other. And ASEAN, of course, has a very important place in our relationship with Asia as well. So once again, I'd like to thank all of you for bringing in all your insights and your very valuable experiences into a conversation that started off with a wonderful book that I think all of us will want to read, but also looks at the ways in which we can and are working together. And as Marco said, being quite creative while we do so. So thank you again, everyone. Thank you for your questions, and thank you for joining us online as well. Our conversation, Ivano, if I'm not mistaken, will continue in the coming weeks and months ahead. Thank you very much indeed.
Thank you.